a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
The Reserve Bank of India has put out its new stressed asset circular. The new rules ease significant provisions related to the timeline that needs to be followed for resolution of stressed assets. It also includes non-banking financial institutions under its ambit to report stressed assets for resolution. Deputy Governor of the Reserve Bank of India, Mr. R. Gandhi essentially joins us right now, the former Deputy Governor of the Reserve Bank of India, to tell us what he makes of the new norms. Mr. Gandhi, good having you. Thanks much for joining in. Question, what have you made of these norms?
Yeah, based on the direction given by the Supreme Court, naturally the Reserve Bank has to modify the rules relating to the resolution guidelines. So that's why it has come out with this requirement. Obviously, some significant changes are there between the last year February guidelines and Southeast this. So this is more in full compliance with the Supreme Court directions. So, yes, the first is, you already mentioned, that these instructions now cover NBFCs also. So that is one major change. And it has also now, the first thing is that referral to IBC liquidation process is not mandatory, but it is banks are encouraged to do that through some kind of disincentivization if they don't do it. But the call they can take, the creditors can take the call whether they need to be referring to the liquidation process or not. So that is the first major change which has been done. And second, earlier the instructions applied to those cases where the total exposure of the banking system is 20 billion rupees. Of course, in this circular, even 15 billion rupees will be covered by 2020. So that is extension. The coverage of the circular now applies to, will apply by January 2020 to 15 billion exposure also. And then the earlier, the major expectation from the market was that some kind of special dispensation should be given to the power sector and other important sectors which are important for the economy as a whole. There is no explicit provision in the circular, but the banks have the discretion to decide about that. So that way, that has also been in a way enabled. If should the bankers consider it as a very important, then accordingly they can design the resolution process accordingly. Third major change which has come is that now the circular recognizes a formal mechanism of inter-creditor agreement. The earlier circular had withdrawn the JLF, but there was no alternate formal forum. So this circular provides for an alternate forum in the form of inter-creditor agreement. And the agreement among the creditors also need not necessarily be 100. It can be by 75% by value and 60% by number. These are the key differences between the earlier circular and now.
Earlier, yeah. Sir, a plus and a question mark. So firstly, the plus, the people that we spoke to throughout the day today and over the weekend has said that they now believe that there'll be a lot of resolutions outside the IBC possible now, because companies had put plans for resolution, but because of lack of unanimity would not go or would not be able to go ahead. Now that leeway is available, and therefore the number of resolutions outside the IBC will increase. Would you second that?
No, I don't think so, because everybody, all creditors definitely know that IBC process, the resolution process, IBC will be more robust. We are not talking about liquidation process now. We are talking about the resolution process, the resolution plan. So there, because of the legal arrangement under the IBC, I would expect the first priority for first preference for the creditors will be to take to agree on a resolution plan and then get it registered through the IBC process. So by outside IBC resolution process, whether this circular will increase the prospects, I'm not there's very rarely that people will go beyond the IBC natural process.
Okay. Now, the other bit is, and the question mark that a few people have raised is that the onus of resolutions on banks, there is a leeway, all of that is great, but the track record of banks in this regard has been very patchy. So whether or not this will lead to more resolutions happening in the first place and at a heightened pace is a question mark. Would you second that, or would you believe that this was a chance anyways worth taking?
No, I don't second that. For the reason, because the Reserve Bank, the initiation of the resolution process is mandated under this guideline. Initiation, because within 30 days of default, the review period, the bankers and the creditors have to come to an understanding how the account can be brought back to normal. That's a resolution plan. All of them will have to agree on, unless the borrower has paid back the amount. So the initiation of the process is definite. The resolution process will have to be initiated after within 30 days. Otherwise, there is a disincentive in the form of additional provisioning and etc.
Yes.
So that way, I don't think that this anyway delays the resolution process, or banks have the discretion not to start the resolution process. Absolutely no. Banks do not have the discretion not to have the resolution process. Banks will have the discretion to decide whether they should agree on resolution plan or they have to go for liquidation. That is the discretion they have.
I presume, sir, from your answers that you believe that this carrot and stick approach is essentially a good one. Higher provisioning, yes, but the rollback option given once a case is admitted. I presume you second this approach.
That's correct. Because that's the way, because bankers always are responsive to the provisioning issue. So if there is any incentive for lesser provision, or there is a disincentive in terms of higher provision, they always respond to that. So I would believe that they will not go outside the formal mechanism.
Okay. Sir, not trying to say that the previous circular was not the correct or this one is completely correct, but anything else that you believe could have been done to the Fed 12 circular in the June 7 one, which could have made practical sense?
I don't think any more element is needed, because banks banks and borrowers wanted the discretion to rest with the bankers to decide about the process and decide about the various elements of resolution plan. That is all already built into. What probably the expectation from the market, both from the borrowers and lenders, will be how the classification of the cases in terms of whether they can get regulatory forbearance for not providing for. That is not there, but obviously that is not the way to have to go in a disciplined way. The bank has not considered that expectation at all. That's right in my view.
Okay, Mr. Gandhi, good having you. Thank you so much for taking the time out and giving us your valuable opinion.
Thank you.
With that, it's a wrap on this leg of Indian Open. The markets are trading reasonably okay, about 0.75%, that the banks have come off from the highs of the day, about 0.4% higher.